And today, my friends, is just for you. Just for you, Zach's Live Trader Premium members. Thank you guys so much for being a part of this. I love it. It's fun. It's great. I love the feedback I get from you guys because a lot of these companies, honestly, I wouldn't even do, and I wouldn't learn about them, and I wouldn't have all this fun. So thank you for all your suggestions of what to do and what to talk about and things to strategize with. It's great. I do love it, and I do know in the future this is going to evolve. It's going to become a little bit bigger thing. We've got some great ideas coming up in 2017. I think you guys are going to like it, including seeing a lot of me with a lot of blue behind me. It's going to be great. I'm going to be doing a lot of these from down in Miami, which is going to be fantastic though, because it's all the same stuff. We're going to flex our muscles, show you some of the cool stuff we got going on in this studio, and you guys are going to absolutely love it. Plus, I'm going to add a little bit more commentary, a little bit more daily sort of, not daily commentary, but I'm going to borrow some of the stuff that I do in my other work and bring it on here, talk a little bit more macro. So we've got a lot of ideas moving forward for 2017. So I hope you guys stick around for that because it's going to be fantastic, frankly. So again, this week, what we've got going on is we had Nike, which I already talked about, which is going to report after the bell today. Then, of course, I just talked about Bed Bath & Beyond, and then now here in our premium video, Micron, which I think you're gonna love. Tomorrow is Wednesday, so don't expect anything tomorrow. Thursday though, per usual, we're gonna do our good, bad, and the ugly review, where we're gonna cover these, and we will know both of these because both of these that we did today, and we'll know Nike. We'll know everything from this week, so that's going to be good. And then I can do a quick little review for you guys. And some of those are expiring right away, like the Bed Bath & Beyond trade I was talking about. That expires on the 23rd. With Micron, I'm going to go a little bit further out because we're going to get very aggressive here. I think you guys are going to like what I have to say. So again, guys, I'm still looking. Next week is going to be a little weird, though, because I don't know how many stocks are reporting. Plus, we got the Christmas holiday. Plus, we have, New Year's Eve coming up and all that. So I don't know what I'm going to be able to jam in there, but I'm going to try to jam something. So again, shoot me those emails, livetrader@zax.com. Let me know your suggestions, livetrader@zax.com. What is it you think I can get in there next week? Because I want to try and get something going for us then. Keep the ball rolling. Just stuff it right in there in between your Christmas dinner and your New Year's Eve madness. Okay, so let's dig into Micron. Let's take a look at the price consensus and EPS surprise chart here on Zax.com. Oh yeah, and I wanted to brag, guys. I'm going to be on Bloomberg tomorrow. I'll let you guess what stock I'm going to be talking. That's right. We're going to talk a little Micron on Bloomberg. So you're getting a little sneak preview. Take a look at this black line. You know what it is. The price corresponds to the right Y-axis. The red arrows are earnings misses. Yeah, like what? It's been green recently. Those are the earnings beats, so don't worry about that. That guy? Don't worry about that guy. Now, the multicolored lines represent the evolution of our Zax consensus estimate over time. Take a look at this. It should come as no surprises as these EPS trends tick up. First of all, the stock ticks up. Second of all, they tend to trend in one direction. There's not a lot of reversal. It takes a while. They kind of peter out for a while, and then they trend for a while down. The trend is your friend until it ends. Now, it looks like the stock was in a pretty hefty downtrend throughout 2015. But what's happened recently? Aggressive earnings estimates coming to the upside. Now, what does Micron do again? Chips. Chips, my friends. DRAM. Chips are not just for dips. Chips are for people who want to make money in this market. No, it's not exactly your Trump rotation trade. It's not. I get that. It is a NASDAQ, it's a tech stock, higher beta, all the above. But did you know that DRAM prices fluctuate significantly throughout the course of the year? And it's all about supply and demand. It's almost like they've commoditized these chips. Now, DRAM goes in everything, right? Goes in your computers, your laptops, your phones, all the electronics. Anywhere they need random access, very quick memory to do what they do. So Micron took a little punch when they had problems over at Samsung. So when phones blow up, it's not too good. because the overall market gets affected, okay? And that's what we need here. There's a whole supply and demand dynamic that dictates these DRAM prices. As such, the DRAM prices don't move that quickly in terms of a huge change in the trend or the direction, because it takes time for these to sort of develop, right, after a while. So it doesn't reverse on the drop of a dime, which is good. It's good, because now when you can see a clear-cut trend of something moving in one direction, like we're seeing now, it can be a boon for stocks like Micron. So that's why you're seeing the uptick in the EPS. All right. Don't believe me. Let's see what the other analysts are saying. Zacks ranked number 1, strong buy. Value style score of A, growth of F. Really? Momentum style score of A. So again, after the market closes on Wednesday, that is tomorrow. Look at this. You don't see this too often. Zacks industry rank top 1%. Number 1 out of 265 industries we rank. Of course, the sector rank is number 1. So this, my friends, is the creme de la creme right now in Zacks. 5 earnings estimates to the upside over the last 30 days for the current quarter, 4 for next quarter, 4 for the current year, 4 for next year. Look at the impact on EPS from 7 cents 90 days ago to 24 cents now. Next quarter numbers from 14 cents to 40 cents. Current year numbers from 75 cents to $1.59. Next year goes from 218 down to 165 up to 226. Now, how have they done in the past? A few losing quarters in a row. So you're coming off of 3 losing quarters in a row, but surprises each time. After a year ago quarter coming in at 24 cents versus estimates of 23. So it's always good when you see a stock that had been reporting losses that suddenly wants to go ahead and report a gain for you, okay? These are always victories. Now, there's one big thing that happened here too during the quarter is these bad boys closed an acquisition. The Inotera acquisition, which analysts estimate is going to be accretive to earnings, meaning they're going to make some more money in Q3, Q4, accretive 3 and 4 cents respectively. So you're going to see that. Now, there was a little bit of dilution in the shares when they did that. They added about 5% more shares. That's okay. If you're going to give me 3 or 4 cents, solid. All right, now let's go ahead and take a look at this options chain, see what we can't dig up. So, as always, folks, at the money call, at the money put, in the front week, this gives us that sort of implied vol. So, again, the call is going to cost us about 70 cents. The put's going to cost us 50. That gives us $1.20. Divide that by the strike price of 20.50. And you see that we are talking about a 5.8% implied volatility on Micron. That should come as a surprise. If you were paying attention to the Bed Bath & Beyond video that we just did, they're looking for 7% out of Bed Bath & Beyond. That's not a tech stock. There's nothing exciting about Bed Bath & Beyond. Towels and pillows and whatever and beyond. Only 5.8% implied volatility on this. I like seeing stuff like that. I like that, right? Because that means that maybe they're underpricing this. Maybe it's going to move a little bit more than expected, right? So that's good. So when I see that, it makes me want to go long premium in one way or the other, right? So we're going to do this where we put on the call spread and the put spread. Now, again, what do we want, though? We need to get some post-earnings drift in either direction. So the bullish trade, the bearish trade. I'm going to go out to the January expiration because there's going to be a lot more players in the game in January, and I want to get some time for this thing to go ahead and get some traction and move in either way. Now, there are some risks here, right? If, for some example, they come out and their guidance isn't so hot, this growth premium that's been priced into here is going to pop and fade away, and the stock will dive sharply. Now, on the flip side, if they come out and they surprise and the guidance is even better, I think the stock goes bonkers to the upside. So that's why I want to get really aggressive on the bullish side or the bearish side. Either way I look at this, right? And again, you don't have to agree with me, but this is what I'm going to show you. All right. So hang on a hot second here. Let me get rid of this pinkiness. And bar chart, loading something up. I think I got a little click happy there, folks. Okay, now change this expiration when it comes up to the 20th of January. Now this is going to give us that monthly expiration in January, which will be good. Oh, and again, case in point, just want to remember, $1.20 is what we were talking about here, okay? $1.20 was that sort of implied move on earnings. So add that and subtract that to where the stock is. So the stock's at 2070. And again, we're doing round things here, right? So 1950 is pretty much the downside of what that market is pricing in. And the 22, yeah, $22 holler is what it's pricing to the upside. So keep those in mind when we're putting these plans together. So first, let's look at the bullish trade because its calls are over here on top. And again, this loaded up nice for us. Now, when you're doing this on bar chart, remember this column is the midpoint. That's likely where you're going to get filled on anything like this, right? So that's why I like using bar chart. It gives us a nice, easy number. Okay, if I'm aggressive and I want to be bullish on this, that 2050, that at the money call, I want to look at that. And what did we say? $22 holler. I say can do every bit of that. Every bit of that. What does this trade look like, folks? Long, the 2050, 22 call spread, Jan 20th. It's going to cost you $1.12 to go long that 2050. And you could sell the $22 call and get 53 cents. See how that works, folks? So this is where it gets interesting. So 59 cents is how much it costs to put on the 2050 22 call spread for Jan 20s. Okay. Now, the amount that you could potentially make on this, the difference between the strike prices, which is 150. So you got to subtract that from that. So 150. So you can make 91 cents to the upside on a 59-cent investment. So when you make that math, that's a potential 170% rate of return in just a month. Okay. Now what has to happen? I mean, this is an aggressive thing, though. This is very aggressive. Micron would have to be above $22 per share for that to work out. So they're going to have to rally a good, what? 130, $1.30, right? From where we're at? Is that what it said? Yeah. This is a pretty aggressive move given where it's at. But it is a tech stock, and this thing does fly around because I've seen it. Okay? So pretty aggressive. 170% though, potential rate of return. Micron would have to close above $22 at expiration on January 20th in order for you to cash in on all that. Okay? All right. Now, flip side. Let's look at the bearish side of the equation. And again, we said a lot of things about what the potential move could be here, right? Maybe, you know, the margins aren't as good on the DRAM as they thought it was going to be. Maybe the guidance isn't as good. Maybe the revenue doesn't get as good. I mean, there's a plethora of issues that could come in here, you know, as a result of all this. Plus, we do know a lot of information because Micron likes to talk to us a lot. But let's just say this blows up. So if you want to be negative with Micron, what you do is you'd be looking at this 2050, and then to the downside, we said 1950. You know what? Not even the 2050, the 21, because we're on the put side, right? So we went to the 20 and 1950. Let's see what this trade looks like. So midpoint of this 21, I'd be long the $21 put for $1.17, and then I'd be short the 1950 put for 51 cents. So now you're talking about 66 cents is how much you'd have to lay down to play with the 21/1950 put spread, the Jan 20th. Now again, what you're going to have at risk, the difference in the strike price, which is $1.50, minus that 66 cents, or 84 cents. Okay? So you could make, I'm sorry, that's not what you're going to have at risk. That's what you could potentially make, because your 66 cents is what you're going to have at risk. So that's a potential 127% rate of return in just about a month. Now, what has to happen for you to cash in on this is that Micron would have to be trading below $19.50 at expiration on January 20th. So you're going to need to catch some post-earnings drift to the downside in order for this trade to work out for you. But again, this is a stock that is traded in the low teens for a long time and just recently has caught fire. But again, it was also a stock that was up at 36 bucks not that long ago. So definitely a higher risk play either way. But in my humble opinion, on Micron, is the bullish or the bearish trade the way to go here? I think you got to be bullish here on Micron. I've been bullish on Micron for a while. It's worked out. The way that the trends are developing here, I don't think there's any reason to not be bullish. I think it can take back a lot of these levels that we previously had, right? Maybe it doesn't go to 36, but can it go to 25? Easily. I think it can easily go to 25. Plus, I think there's going to be a ton of demand in this DRAM space over the next several months. You've got some new products that are going to be coming out. Samsung's got the 8. This time, the Note 8's not going to explode in your face, they promise. So there's going to be a lot of demand, I feel, there. Plus, you know, don't forget, NVIDIA is out there giving you VR, that stacked 3D RAM technology going on there. There's going to be a lot of demand for these chips because of VR. VR, augmented reality, it's a lot of processing power. It's going to take a lot of memory, my friends. So, there you have it. Mañana, my friends, nothing. Questions, comments, concerns? Shoot me an email at livetraderzach.com. Let me know what you want me to try and squeeze in next week from Sunny Isles Beach. And yeah, I guess that's all I got. I will see you all on Thursday. Have a fantastic day. And if you don't catch me on Thursday, have a great holiday weekend. Thanks, everybody.
You will get a sentimental feeling when you hear voices singing, let's be jolly, deck the halls with boughs of holly.